We're live. Hello, everybody, and welcome to another episode of This Week in Real Estate. I'm Ray, host of... Wait, hang on. It's already playing in the background. I'm sorry. I'm a professional, I promise. In response to the guy last week that was like, work on your audio. I've put so much work in the audio this last 2 weeks. Welcome to episode 339. It's hard to believe we've been doing this show for that long, but we have. We got some exciting news today. The Fed is going to make a rate decision without all the information he needs. I don't know if you guys know this, but the government is shut down. And because of that, there's certain reports and things that don't come out that the Fed usually relies on, uses, references during its decision. So we'll see how much that reliance is actually made up. I mean, if he just continues to do the same plan he was going to do, then, I mean, it's kind of made up, isn't it? He's not actually relying on those reports. He's just doing what he thinks should be done.
Exactly.
Yeah, Andy's like, exactly. So we'll discuss that. Also, we're broadcasting everywhere in the world. If you are joining us on YouTube, you can comment. I can display your comment. There they are there. What's up, Olivier? He's joining us, saying just here to make the second comment. Say Matt was getting soft. And Scap was first today. Here making the first comment. Jack says the music is on. There's also a new feature where I can show the comments on stage, which this is kind of fun. So we might do this. I'll make it medium for those of us that are, need some eyeglasses help. So we'll see if if this works. I think I can just turn it on and off. So as we have new comments, I can just switch it on there. If the chat section on YouTube starts to go nuts, I'll leave it there so everybody can see the comments. We're also broadcasting on Twitch, on Kick, on Instagram. I can't display your comment on Instagram, but if you join us there, I can give you a shout out. So thanks for joining us on Instagram. And let's see, LinkedIn. We're also broadcasting live on LinkedIn. So we're broadcasting everywhere in the world. And there's something else that I wanted to add today too. So I need help from the YouTube audience. If you could tell me if you can hear this, and if you even like it as having a little background music. So I watch a lot of streamers, and this is the closest thing to a stream that I could probably get away with, because it's the most amount of time that I am online in any given day is during this show. So, and a lot of the streamers are putting some background music in and I really liked it. I noticed that a lot of the streams I was watching just had a little bit. And I was like, oh, that's kind of nice. So let me know if you like it or if you hate it. Scap said, is that a challenge? And easy challenge. All right, I'll display it. I'll put it up there for you guys. You just let me know. Oh, why does it have a question mark by Scap's name? I mean, I think maybe we all know, but does that mean I've clicked on it? No. As if I favorite one, it doesn't change it. I don't know. There's a little, do you see the little question mark icon? There it is. Now it's on Olivier. Olivier says, did you put someone into contract quicker than making a Rubik's Cube? Not yet. Is that how you spell Rubik's Cube? Oh, I thought it was spelled different. I posted the other day that, all right, so this is no joke. Y'all, some of y'all are not going to believe this. Game 3 of the World Series. I didn't watch any of it. And because I tried to log on to the streaming and they're like, no, we're not doing that now. We're showing the world poker. I'm like, what's going on? So they preempted the World Series for poker. Hey, what's up? Brian Hershey. Brian_Hershey, HIRSCHY. He said, why do you break the internet, Ray? Jeez. Did I? I feel like something's weird. Anyway, thanks. What's up, Jenna? I'm going to see Jenna this weekend. All right. So anyway, back to the story. I'm actually not watching the World Series. I'm up late working. I'm normally up late working. When everybody goes to sleep, I go back and get to work. So I'm working on landing pages and stuff like that. So as I was working on these landing pages, I start to see notifications like Shohei Ohtani has never been struck out in the game, and he's on base every time. It's the first time in history. I'm like, oh, that's cool. And it's like 12 o'clock, 1 o'clock, game's still going. I'm still getting notifications. It's like 5-5. And I'm like, oh, this is a really interesting game. So I think I wait until like 2 a.m. I'm like, well, I might as well check this game out. I can't remember the exact time, but I go to ESPN where it has a little listen thing. I click on the listen button, and they're a commercial in the 18th inning, in between innings. I'm like, wow, 18 innings. That's really cool and historic. So I post on my Facebook. I start typing out, I can get you under contract on your dream house faster than Game 3 of the World Series. And as soon as I do that, as I'm thinking about what to write, I've gone back and forth on it several times because I overthink everything. Doesn't everyone? So as I'm overthinking this problem, the Dodgers, Freddie knocks it out of the park, and then I hit enter right when that happens. So the only time I listened to any of Game 3 was the last home run. So I was like, man, this will be really cool to like kind of have this going and just see how far they go as I continue to work. It's just something that kind of keeps my attention. No, it was as soon as I tuned in, it was over. So, but hello to all of my Canadian friends.
As soon as I tuned in, it was over.
What?
You capitalistic pig. Oh, sorry. I'm listening to YouTube and
you are
and commenting on Clubhouse time. Sorry about that. I was talking about the home run.
Oh yeah. That was
sorry,
wild, man.
I need to know my delay.
That's right. Yeah, when you listen to it is a little bit of a delay over there on the YouTube. So
sorry.
No worries. I'm just glad you're here. Oh, since you're on YouTube and since I have you, can you hear the music in the background on YouTube? Is it worth it?
No.
Okay.
I'm not hearing any music.
I'm going to turn it up a little bit then. We'll risk it. Let's risk it for the biscuit.
Sounds good.
We'll see. It's not my favorite
Not hearing
song.
any music.
Oh, now I got it a little bit.
You got a little bit? So it shouldn't be very loud. It should be kind of soft. I'm on 12.
Oh, wait a minute.
We'll see.
I can hear it on Clubhouse.
Oh, now I got it a little bit.
Okay.
So it shouldn't be very loud.
Sorry.
No worries.
Wait a minute.
I like the experiment. Thank you for helping me experiment. NM Homie says Fed will cut housing, not crashing. I don't know. You got to listen to the show. I mean, just what you're saying, but do we really know? What's up, Lindsay? Hey, Rebecca. What's up, Aaron? How are you? Okay. Let me know if you like the music. If you don't like the music, I also want to know. I might do it anyway if you don't like the music because, it's who I am, man.
Is it your show?
What? Yeah, it is my show. I can do what I want. Okay, Olivia says, if the Blue Jays win, are you getting extra tariffs? I think there's some recent discussion about tariffs in Canada because of something there was like an ad that Canada was running that was a little anti-American in America, and Trump was like, all right, you can't do that. We'll see what happens though. Okay, let's jump into the news. What's up, Caroline? I see you. Here it is right here. Boom. Compass pulls Redfin into its Zillow private listing lawsuit. That's this. So if you, what was that? I should have done like a catch up on this because this has been going on now. So Compass is suing Zillow because Zillow said, hey, if you advertise a property outside of the MLS before it's input into the MLS and before it is made public, we're going to penalize you and we will not display that property on Zillow. And the reason Zillow is doing this is they're saying that all the properties should be accessible by all people. And because of that, they're going to remove properties from their website. Now, some of you are like, well, that doesn't make sense. And you would be right. Compass is suing them, basically saying that's anti-competitive behavior and they shouldn't do that because Compass has a different business model and wants to use that business model. And just because there are people out there that don't like the business model, that is a legal business model, you can't penalize them for it. So Compass now pulls Redfin into that lawsuit. So Redfin has put a ban on its privately marketed listing on an indefinite hold Inman has learned, but that hasn't stopped Compass from pulling the portal into the legal fight. In a letter filed on Friday in its lawsuit challenging Zillow's ban on privately marketed listings, Compass asked Judge to force Redfin to provide documents, it says, related to Redfin's own private listings ban. Now, this is part of the fun of a lawsuit. It's called discovery. And during discovery, you can get all kinds of stuff. And what Compass is looking for is collusion between these big portals to prevent Compass from displaying their properties. And if they find that collusion, I feel like there's going to be some trouble. Big trouble. Redfin's ban on privately marketed listings was set to kick in last month, but now is on hold for the foreseeable future. The company confirmed to Inman, and a new Compass letter may provide some insights into why. Compass didn't name Redfin as defendant in its lawsuit against Zillow, which enacted and enforced a policy that permanently bans real estate listings that are publicly marketed. So I do want to put this in context for like regular people, like we're just agents, or maybe you're a home seller. What this is saying is that if your agent misses a deadline, I mean, it could be an accident. If your agent misses a deadline, or if they do it on purpose to market your property off the market prior to it being listed in the MLS, Zillow says they will not display that on their website for everyone to see, and so does Redfin. So therefore limiting your exposure and also limiting their buyers that shop their website to all of the available inventory. All right, so it deposed Redfin CEO Glenn Kelman and issued 2 subpoenas for information from the company. Zillow and Redfin's policies took aim at Compass's quest to build and grow a broad network of listings that are only available through Compass, which is 100% legal thanks to the clear cooperation policy. Did y'all remember that? The CCP? No. Not the one that Trump's meeting with. The clear cooperation policy. Due to the clear cooperation policy, you can have a network of listings that are only available within your company, and it's 100% legal. Zillow and Redfin don't want anyone else to have access to those listings. They only want Compass agents to be able to access those listings. Meanwhile, Compass says we want all agents to have access to these listings. We want to be able to send them to them if we want. We shouldn't be forced to use Zillow or Redfin or even the MLS if our client doesn't want us to use the MLS. Okay. Yeah, see, this is what Redfin said too. Redfin says, because we believe that all buyers should be able to see all listings, Redfin.com will not publish any listings that have been publicly marketed. That's so stupid. I mean, you contradict this is like an SNL skit sentence, and you're contradicting yourself in your own sentence. Because we believe everyone should have access to these listings, we are not going to put these listings on our website. What sense does this make? It's so stupid. If you believe that your model is better than Compass, then beat them in the marketplace. If you don't have a better model than Compass, then they're going to beat you. And just because they're better at marketing it and you're not as good at marketing it, doesn't mean that it's something they shouldn't be able to do. So it's a free and fair marketplace, and you're welcome to do however is legal. You're welcome to do that. I don't know. It's frustrating to me. It's stupid. A spokesman for the company told Inman June 30th, 1 week after the Compass sued Zillow, that the policy would be enforced in September. But the policy never actually kicked in. Whoops. So this is the stuff. All right. Office exclusives do not comply with our policy. Oh, office exclusives do comply with our policy, it says, as long as they are only marketed within the listing brokerage. In other words, Redfin and Zillow don't want you to have access to any of the listings that Compass has exclusively for their own people. Isn't that a different way of saying it? The same thing? It says if they are advertised somewhere publicly, i.e. on the listing brokerage's website, social media, or emails, or behind a gated call to action, sign up to unlock private listings in your area. They'll not be eligible to display on Redfin. Now, wait a minute. Why can't you sign up to have access to those brokerage exclusives? Isn't that what a representation agreement would do? Don't all the buyers of those Compass agents have exclusive agency agreements? Don't they have access to all of those properties? What's wrong with advertising that?
Oh, this makes my head hurt.
But the policy never
So-
actually kicked in, so they never.
Hey, Ray.
they never- yeah.
Redfin and Zillow are buyer centric, and they don't have a brick and mortar that I can go look at their book either.
That's true. Yeah, maybe that's the disadvantage, that they could not produce a book of listings.
So Ray, this is Terry.
What's up, Terry?
When I was in California, we could not get people to sign a buyer exclusive agreement because there were so many pocket listings with every brokerage that they had a realtor at every brokerage that they talked to.
Okay.
Everyone.
But couldn't you as an agent also do that?
Well, I guess
Yeah.
if they want to share them.
And
I mean,
no,
the goal is for them to sell them. So
No, well, if the goal is for the client wants to sell the house, right? So the goal is to sell the house. So you could approach the agent and say, hey, I get somebody looking for this and that. And the agent would say, oh, yeah, that matches this one. If they held it off the market, then, I mean, that's their own fault. And that'll be well known in the area that these agents are withholding the properties. And who would want to sell with someone like that? Why would somebody want to sell with that person? So now they have fewer and fewer listings. That's how the open market works. You know, hey, this brokerage is well known for keeping your property and trying to double end it instead of actually selling it on the marketplace. Okay. Now they're going to get less listings and now they have less control. And now if a client's like, yeah, that's what I want, then that's what the client wants. I have no problem with it. I mean, I think there are agents that did get the exclusives. You know, for years in my marketplace, people were saying, well, you can't do an exclusive. You can't do an exclusive. And they would say you can't do an exclusive and have the buyer pay you outside of whatever the seller said they were going to pay. For years, we've been doing that. For years, our clients pay us to help them go find a house. That's what they're doing. Now, sometimes the seller covers all or some of that compensation, but many times prior to the decision, last August 17th of 2024, prior to that settlement, our buyers were paying us outside of the deal. It was inside the deal, but they were paying us outside of what the seller said they would cover because we worked so hard for our buyers. And I was told by people that have been in the business much longer than I have, oh, no one's willing to do that. You can't do that. It's not true. That's a limiting belief. You provide a better service, people are going to pay you for the service. And how impressive is it if you were able to go to that client and say, oh yeah, not only do I know everything that we have, I also know everything that they have too. And they have 3 properties that may match what you're looking for. I've already talked to the agent about it. I mean, you gotta now you're thinking, well, why would the agent do that? Because they also want access to what you have. So if a client does not want their stuff on the MLS, we got to do what the client wants. And I totally support that. I don't love brokerage exclusives. I think if you're going to force everyone to put it on the MLS, you cannot also do a brokerage exclusive. You got to eliminate it. We have a couple of companies locally that try to double in deals and try to list everything themselves. And people know about it. And I've visited with many sellers that said, I'm not going to list with them because I don't want them to try to keep it in-house. The other thing that Compass has said publicly about their listings that are not public yet is that they're traditionally trying to test the price point, meaning that they're starting much higher than they would when they go on the market. So Compass says that they're willing to share those properties with everyone. And you can go and look at their office and see what they have. And if they're sharing it, they're sharing it. So go look. And then you can share with your client. Now, remember, these homes are likely overpriced, but the numbers will show. So I'm more about the free market and letting the market dictate and decide how they want to do this and move forward. All right, but there's our news for the day about the lawsuits. That's the only lawsuit in the news today. Well, kind of. I mean, there's kind of another one, but it was also settled. So let me go to that one too. Oh, wait, first. Let me go to see if there's any comments on this. All right, okay. All right, anyone else want to jump up and talk about the Compass?
Now we're down to 1 or 2, right?
1 or 2 lawsuits?
Yeah. And here's the website to track the
I mean-
5,000.
Yeah, I mean, it's not, well, we do have the buyer side lawsuit now, which I'm anxious to see how that's going to fare, because you would think if the seller side was a success, then how could the buyer side also be brought? And that's the problem with not litigating it properly and losing the battle in court, is because now you have a settlement, not a real decision. And so now you can't say, well, based on this court decision that said that the sellers were the ones having to overpay, then how could the buyers also be overpaying? You don't have that to lean on now. So there's probably going to be an additional settlement on the buyer side coming. So get ready, guys. And they've already done the math per agent too. So everybody knows. Oh, what a weird industry. All right. Speaking of weird, this is from Broke Agent Media. REcore takes CoStar to court over unpaid MLS data fees. Now, CoStar and Homes.com allegedly owe REcore at least $887,500 in unpaid MLS licensing fees. I mean, that's such a small number for them, isn't it? It's like what they make in 3 minutes. Not really, but it's what it feels like for these giant corporations. So CoStar is officially sued. And this all took place very fast. So I'm not going to spend too much time on this. I really want to kind of fast forward to the second part of this story and say CoStar reaches agreement with the MLS. So that happened very, very quick. Apparently somebody overlooked it. That's what I'm thinking, is there's probably somebody in a cubicle somewhere that got the notice, that put it on someone else's desk, that passed it around, and they're like, hey guys, we got to get to this. Somebody's got to pay them. And someone else was probably like, yeah, go ahead and pay them. And someone's like, all right, well, what do we pay them? Out of what account do we pay them? How do we pay them? And that stuff was just kind of floated around in corporate, what's the word I'm looking for? What's the word? Purgatory, corporate purgatory. Yeah. And then the lawsuit probably got their attention. They're probably like, oh, we got to take care of this. So I think we've all been there. We've all been there where you missed something. It's like, oh, I didn't really realize we missed that payment. And then you lose access on something. And you're like, oh, that's what that was for. Okay. That was a real invoice. Anyone? It's just me. Yeah.
Getting a new credit card to reset your budget.
That's right. Hey, I do that actually maybe every other year or so. I'll request a new card and I don't automatically transfer anything. And I see what stopped. And you get all the notices like, hey, we couldn't process your payment. If you want to continue with this service, you're like, man, I forgot I even had that service. I'm not going to continue with that.
Yeah, I've done that accidentally. Been hacked or something like that, and then you're like, oh crap, why is that turned off? Oh, I got a new card. That's what was on that card.
It's actually a really wonderful cleansing. We're coming up on the new year, so it's something I actually recommend it. Now you gotta make sure that you have updated email addresses and stuff like that. You don't want a creditor to be on you about something stupid like that. But it's actually a pretty nice way to analyze your spending. Is in right after Christmas, cut up the cards, request a new one. All your numbers and everything change. And the annoying part is that you have to go back in and input, but that's been coddled a little bit by all the password apps and credit card apps. But then you get all the notifications of like, hey, we tried to process your payment and couldn't. You're like, whoa, why was I paying $15 for this marketing service that I forgot what I was paying? So
It wasn't even working.
yeah. Yep. I didn't even know they still had access to my account. Yeah, it's a good way around it. All right, so let's keep going. This is some team news. We don't normally cover a lot of team news, but this one was pretty big and interesting. Pozek Group, Kim Pozek, good friend of mine, rejoins REAL Brokerage. So that was interesting. He joined REAL a while back and then went back to Keller Williams. And I don't know the details of that. Something tells me there was maybe there was a big incentive there. So he goes back to KW. And then
that was almost immediate, wasn't he? He made the big announcement, and then like a week later or something, he was right back in KW. What?
No. It wasn't a week later. It was a long time.
Was it?
Yeah. It was. Let me see if it says it. I don't think it says it in the article. I want to say he was like Let's see. It doesn't say. I am a little confused because, he's a friend of mine too. So I'm already in kind of community with him a lot. So I can't remember how long he was here, but he was here a while. I want to say a couple of months, and then got a good offer, I think, from K-Dub, and now he's back. He's back at Real. So, like I said, I don't know details of what he was offered to go, but I don't know. Maybe it was that Real Brokerage wasn't ready to take on a big team. We have launched something called Pro Team since then. So, and it gives them a lot more leeway to like adjust your team splits and all that kind of stuff. So maybe it was something having to do with that. I don't know. But he's back, which is fun. I think I'll see him next week. I'll be at Rise. By the way, if you guys are going to Rise, if some of you are at Real, let me know, because I'd like to meet you at the conference. And if you listen to the podcast, please come and tell me. I want to know. Okay. And all right, so there's Ken. He's back. That's interesting because he's a gigantic team. That's why we're covering it. I don't cover all my friends coming over to Real, but that's a gigantic team in Orlando and could be significant. So we'll see what happens. All right. Pending home sales numbers hit at growing confidence. Pending home sales numbers hint at growing confidence. So we're on the economy a little bit. We have 26 minutes before the Fed makes the announcements, and hang tight because we're going to cover that live. But I want to know what you guys are seeing in the economy. Are you seeing people starting to come out of the woodwork now that they've heard that rates are down? While contract signings still aren't where they should be, NER's chief economist says pending sales are indexing at one of the highest paces of the year. Plus, inventory continues to rise. So this article is on Realtor.com. So I'm sorry, no, not Realtor.com, because we lost that a long time ago. NAR.realtor, realtor.org. So this is in the Realtor magazine, which is no longer in print. It is only on online now. All right, so the National Association of Realtors Pending Home Sales Index, a forward-looking indicator based on contract signings, showed no change in September compared to August, and down just 0.9% annually. But that translates to holding steady and matching the second strongest pace of the year. Lawrence Yun, chief economist, says economists aren't shrugging off that progress. And the latest housing report released Wednesday follows NER's existing home sales data, showing a 4.1% annual increase in September. Contract signings last month saw the largest monthly gain in the Northeast, up 3.1%, and the South up 1.1%, signaling a possible sales boost ahead. So anyway, I thought this interesting headline. All right, I want you to keep this in mind. Pending home sales numbers hint at growing confidence. So what they're saying is like, hey guys, these pending home sales numbers are actually pretty good. And we can look at these and say, maybe things are growing. But Realtor.com says pending home sales remain flat in September despite falling mortgage rates. and the top line is pending home sales remain flat in September despite a healthy decline in mortgage rates and in an early sign of continued weakness for the fall home buying season. So NAR says this could be a good sign of growth. And Realtor.com says this is clearly a sign of weakness. What is it? What do you guys think? Is it weak or is it strong where you are?
I think it's impossible to garner any behaviors out of this information in a macro form. My own micro market, which is 4.5 square miles, has probably 5 price sectors of, 5 to 7, which is our entry, is warm, 7 to 9 is cold, $1 million to $1.5 million is warmer, 1.5 to 2.5 is cold. I mean, it's just to say you're gauging sentiment, even in a region, is hard when I can't do it in my own town.
Yeah, that's true. I mean, it's
and I'd like to know if is that what everybody else is seeing with the lukewarm parts of the market, because you hear from your clients that they're living in a market 2, 3, 6 months ago that, oh, why isn't my house getting all these showings and all these offers? Well, I just told you the days on the market are now up to 40 days on the market for an average in your price range.
Yeah. I mean, chime in. And if you're listening to this on the replay, drop it in the comments. How's your market doing? Are people jumping into the market or not jumping into the market? I can show you what ours currently is according to Altos. So altos.re. So it says that the median sales price currently for us is the 90-day running average is 290. The 7-day is 284.9. So I would say right at 290. Then we have the days on market. The days on market, the average days on market are sitting at 101 for us. 101. They were in August of 2022, 58. So that's as low as they got. I know it seemed like 2 hours, but remember that's the average. So if we look at the median though, that's going to have a lower number here. The median days on market for the 7-day average is 70. For the 90-day is 63. So the 70 shows the trend, or 7 days shows the trend. So if in the 90-day it says 93, but in the 7-day it's showing 70, it's trending upward. And the lowest it got in our market was 27, 28 days on market, which for us is absolutely incredible. Like that's such a fast market where we are. So,
I would guess that for anybody it is, and it goes back to your this version of the crash theory.
Yeah.
Or correction.
Yeah. Where it feels like because that was so fast, now it feels like we're in a crash. Yeah, I do think when we look at 28 days on market as a median, that was misleading though, because you're talking about 40 in our market at 28 days. We're still selling a house in an hour, but not all houses were selling. So the cute ones, the ones that were photo ready, the ones that were marketed well and priced right, they were selling in 2 or 3 hours, multiple offers way above ask. But we still had properties hitting the market that would sit. They were either way overpriced, or the condition wasn't very good, or maybe a less desirable location. So I think in some cities, even those were going well. For us, I mean, it's not. But I can tell you that right now, if you list a property and it's well priced, marketed well, you'll sell it in the first day or so. The last 2 listings we listed sold in 2 days. So even though our days on market are averaging right now 60 and 70, we're beating that. We're beating the pants off of that. Okay, our luxury stuff. Oh, you know what? Here's market segments. This is always interesting. When I look at the market segment button, over 729,000 is considered luxury in our market. I would say over 700,000 is probably luxury in our market. That's sitting at 77 days on market. But you know what's really unique is 120 and under also sitting at 77 days on market. Isn't that interesting? The 2 middle ones are the 225 number, which is right around the market average, is 49 days on market, and the 359 or 360 is right at 63 days on market. So we have the really high and we have the really low, both with long days on market. And the reason is a lot of people can't purchase the $120,000 house, even though it's cheap, because of the condition it's in. They couldn't get the loan approved. And a lot of people aren't buying the $700,000 house because they don't think it's worth that. And the rates are such in which the affordability is low on those now. So we need cash buyers in the bottom end, or people that could do conventional mortgages. And then in the upper end, if the price is not compelling, the home is not selling, which Steve Harney said years ago. So that's where we sit in our market. And if you want a referral code I should get a referral code for that website, because I know some of y'all are going to ask me about it now. I'd love to make bank. Anyway, so here's a mortgage.
So you're not price bracket sensitive on demand?
Yeah, we are.
Okay.
But the bracket is not just, it's not a fluid, like because it's lower, it's selling faster. Because our lowest stuff is not in very good condition. I think if you went and looked at your lowest sell price, I bet there's a lot that are sitting just as much as your luxury. For the same reason. I don't think we're in a bubble. I think that's probably around the country like that. But I'm just speculating.
Yep. Thank you.
What's up, Claudia? I see you guys over on Instagram. Thank you. Mortgage rates from 2020 to today is the chart we're currently looking at. The 30-year fixed rate mortgage averaged 6.19% as of October 23rd, 2025. That's down from 6.27% a week earlier. So 6.19 is the lowest since 2024, and it touched 6.09. The last time it hit that was in late 2023 or mid 2023. No. That was early 2023. It's hard to tell. It's hard to tell with the graph that you guys can see. And then before that, wow, I mean, 2020 was 3.72. Then it got down to 305, man. Wow. And we're going to see what happens today. We're 16 minutes away. 16 minutes from the Fed announcement, what he's going to do on rates. Go ahead, drop in the comment your predictions. Let's see. Courtney McCullough, living in Columbia, South Carolina, said same in your market. Adam Johnson said condition is huge. Huge. Adam Johnson, well-known Trump fan. Adam Johnson says 4.75 on a 5-year ARM. Oh, yeah. You mentioned that a lot of people were looking at ARMs lately in your market. We don't have as much of that. There's some, but not as much. So, cool. All right, let's go to the next article. Home prices. Home prices lag inflation, meaning homeowners are losing out on their investment. That's a stern title, man. If your client sees that and they just bought a house with you a year or two ago, they're gonna be like, what? Ray, what? Home prices nationally rose 1.5% in August compared with the same month last year. That's down from the 1.6% annual recorded gain. While home prices aren't falling yet, they're weakening, rising at a slower pace than the current 3% rate of inflation. So basically it's saying that your home asset is not appreciating at the same rate that other things are going up. But if you have a super low rate and inflation is now back down to 3, then trading houses makes more sense. For a while there, I was thinking about buying a house, and I would run the numbers and say, I just can't stand to pay off my current mortgage because it's so low. It's like in the low 3s or maybe even the high 2s, I think. It's crazy. And I'm basically getting paid to maintain a mortgage because of what inflation was. So now that inflation is kind of normalized and even being tamped down, once rates go back down, which they're headed there a little bit, once they get to 5, maybe 4%, I don't think we're going to see 4% again, but once they get to 5, maybe I'll start doubling up those home payments again, but definitely took a break for a while. Adam said, I think upward movement in home prices is a positive note, still a seller's market. Yeah, for years and years and years and years and years, I think you have, appreciating housing market. Our generation was one of the only generations to watch a housing market not appreciate. There was a 10-year period where it didn't go up. It went down 19%. That was crazy. But for the most part, historically, because there's the same amount of land mass and there's more and more people, home prices in land go up. That's kind of a normal thing. They're not going up at the same rate that jobs or that your income went up, but they're going up. So buying one is a fairly solid investment. And I made the announcement earlier this year that I thought that the home prices would pretty much be stagnant because everything else has started. It's got to catch up. unless rates hit fives. If rates hit fives, those home prices are just going to go straight up again. So mark my words. What were you saying, Andy?
I was saying it's basically just balancing out for right now, but I agree that last statement is the rates hit the fives, especially lower fives in say a year and a half, because that's where it seems like it's going to trend to, then wow, yeah, like it's going to skyrocket. Things will flip back over. But hopefully the economy is moving better because of all this stuff. Generally, is what happens. Generally, but we'll see.
I think I saw the number. The incomes were up around 4% on the year, so incomes are starting to go up. And there's some people asking why. We were talking about why. I mean, we could speculate on that, but I think all the foreign investment back into the country is a solid improvement. People are trying to bring some factories back online. That's pretty good. But I think you also see more people hiring legally. I think that definitely has an impact on it. Houses with Soul says, what up, Ray? This article can be an awesome touch point. Yeah, I totally agree. It's something definitely to put in front of your clients and say, what do you think about this? And just listen. Adam Johnson says, I have 2% on a 15. 1995 to 2006, builders overbuilt in the median home price sector. Yeah, for sure. Fields to townhomes. That isn't happening now. That's why prices sunk during the recession. Too many median overpriced homes. Too many median priced homes, you said, but yeah. I
think there's another part of the economy that's about to explode and could help get a lot of things moving, and that's the coaching carousel that we haven't talked about.
The what? The coaching carousel?
Yeah.
That we have in the SEC? Is that what you're talking about?
Yeah.
Yeah, there's something going to happen. Yeah. I think Bobby P is going to get a head coaching job. I hope it's with Arkansas, but I think he's going to get a head coaching job somewhere. So I hope we can keep him. Anyway. All right, we've got 10 minutes until the Fed makes the announcement. 10 minutes. So if you're going to go get a sandwich, now's the time. Mortgage rates drop near a 3-year low, opening the door for home buyers, but few are walking through. So the daily average mortgage rate did drop to 6.17% this week, the lowest level in 3 years. Lower mortgage rates are curbing growth on monthly mortgage payments. Typical payment is $2,556. That's up 0.6% year over year. That's the smallest increase in 3 months. A home buyer on a $3,000 budget can afford a $473,750 home at today's mortgage rate, compared to the $447,750 home they could have bought 1 year ago. So their buying power is way higher. That's awesome. Compared to a month ago, they've gained $9,500 in purchasing power. That's such a powerful stat. Compared to 1 month ago, buyers have gained $9,500 in purchasing power. Okay, so what does this mean? Let's say it makes another transition downward and they gain another $9,500 and they've basically gained $20,000 in 2 months. That means home prices are going to go up because more buyers are going to jump into the market. So right now, use this $9,500 in purchasing power and go get you a good deal on a home that's been sitting for a while before all the other buyers jump in. That's the strategy.
I love that. If you say it real fast.
What?
I mean, is 20 grand really going to spur the market? I mean, yes, it's going to give some people an advantage, but
I think 20 grand deterred the market. So if it can deter the market, couldn't
start to rain on your.
No, think about it.
Start to rain on your.
As soon as stuff started to go up, people are like, "Well, I can't afford that now." We've lost $20,000. That was a number.
Yeah.
A couple of, maybe it was a year ago that people were talking about that number. That's why I brought up the number of 20,000, because it was all over the news. Adam says mortgage rates usually bounce if the Fed does what is expected. I could see rates doing an uptick tomorrow if rates are lowered. I think it would be a temporary lower. The only reason why it wouldn't be sustained, Adam, is because he said that there would be 2 rate decreases from now until the end of the year at the last rate decrease. So I think that's what kept it from bouncing up. It did bounce up for like a day or two, but then went right back down. Had he not said that, had he not forecast what he was going to do in the future, I think the rate could have gone up and maybe stayed a little higher for longer. But I think because he's already announced another rate decreases down the road, I think rates are they may bump up a day, but then it's going to go right back down. Where's the source of this article? Redfin. Redfin is the source of that one. I will have, I haven't said this in a while, but all of our articles and everything are going to be in the description of the YouTube with timestamps of when we talk about it. So if you are interested and you're watching the replay, just go down there and do it. But here you go. I can do this. Are y'all liking the music or no? Is it annoying? Is it good? Matt says I represent this comment. Matt doesn't know about it yet. Matt, can you hear the music on YouTube? Do you like it? Oh, let's invite him as speaker. I invited you up, Matt.
Yeah, sorry. I realized I wasn't on stage. Scott probably kicked me off as a permanent moderator. No, I apologize for my tardiness. I had my 1 o'clock cancel and then replaced with another one. So, but yeah, you can hear the music on YouTube.
You can hear it? Do you like it?
I do. Do you want me to?
Courtney says it's different. Thanks, Courtney. Thanks, Courtney. She said, not bad. It's just different. Thanks a lot. I really love the support, championing some of the new stuff we're trying. Like I said, the reason why I'm doing it, and I want your feedback from it, is I watch a lot of streamers. I just have it kind of up in the corner or something like that as I'm worried. The reason why I said up in the corner is I literally have a 55-inch screen in front of me, so it's gigantic, like wall of computing. And so I usually have a streamer that I'm watching or something up there. And I've noticed that a lot of them have like a little music in the background. So I'm like, well, all right, let's try it out. See what happens. See if people like it on the stream. I'm wondering how many times I'm going to get copyright notifications though. Even though I buy these songs and have license access to these songs, they're really good quality. And the person that sells the license really vigorously defends that license. But then I have to go and be like, no, don't copy strike me. These are all good. So we'll see what happens. I've played like 5 or 6 songs during the show. So it could be kind of an ordeal later. I don't know. It's usually at 1 a.m. where I get the notification. Courtney said, love you, bro. Don't hold it against me. That's fine. No, it's, maybe I'll have different playlists. We'll figure it out. 5 minutes until the announcement. Mortgage rates dropped to the lowest level in over a year. We were just talking about this, but I thought this was interesting. Pushing refinancing 111% higher annually. So if your clients don't know about this, let them know. Tell them. Say, hey, did you know about the rate drop? Are you guys going to make any decisions regarding your home? Do you need a good appraiser? Do you want a mortgage lender to help you do the refi? And partner with your mortgage lender. Maybe get some mailers out there about it. Okay. Let's see. We already talked about... applications for a mortgage to purchase a home rose 5% for the week. They are 20% higher than the same week a year ago. That's the number I was looking for. Applications to purchase a home were 5%. That's solid. Purchase applications increased compared to the holiday shortened week across most loan types. However, USDA applications fell more than 26%, impacted by the ongoing government shutdown. Yeah. So if the government hasn't shut down, those applications may be up a lot more. And this is part of the incomplete data set that the Fed is going to have to use to make the decision on rates today. Is he just going to hold to it thinking, yeah, I looked at it the other day and it's fine. But there's some reports that it's not going to get. So where are they? Where are they going to be? For my Bay Area friends, Bay Area housing market heats up amid the AI boom and the return to office. People are saying that the return to office stuff would be killer to the housing market, but look, it's really good for the Bay Area. Pending home sales in San Fran jumped 17.1% year over year to the highest September level since 2021. Homes in the Bay Area also sold quickly in San Jose. The typical home went under contract last month in 19 days faster than the typical home in the metro. Interesting. San Francisco is 21 days faster. Oh, no. Yeah, it was. Oh, okay. I'm sorry. It was in 19 days, period, or comma. That's faster than any other metro. San Francisco came in second place at 21 days. So that is the days on market. I was thinking that's how much faster it was, but no, that's the total median days on market. That's fast. The national USA number is 50. Let's see. Detroit, Michigan was 25 days on market. Warren, Michigan was 25. Boston, 25. Kansas City, 27. Oakland, 28. Seattle, 28. Indianapolis, 28. Cleveland, 28. That's fast, man. All right, we're 2 minutes away. 27% of for sale homes are newly built. Adam, this is what I was telling you that we would get to. So that's the lowest share in 4 years. And this is what Adam was saying, that, during the boom, the number of newly built homes was crazy high. And now it's very low. Newly built homes made up 26.8% of single family homes for sale nationwide in August. It's the lowest level in nearly 4 years and is down from 28.2% a year earlier. I want to know what price ranges they're building these homes in. I may have to find a different report on that. Housing starts fell 6% year over year in August, and housing completions fell 8.4% after construction surged during the pandemic. Yeah, that was the other time that they were overbuilt. During the pandemic, they were going crazy and getting as many homes up as possible. Even though they're not now, there is some of that inventory out there. It's interesting. Well, are we ready? Because I'm pretty sure we're about to have some breaking news. Just waiting on it. Hey, while we wait, I want your opinions. Drop your opinions in the comment. Do you like the music or not? Median price range show. Ask Gronk. It's hard for me to ask Gronk when I'm live. I can't do it. I can't do it very well on the live. Okay. You already have it? You already know the news? Fed meeting live updates. I'm just waiting until there's like 2 seconds after it happens. There's always an article that comes across the wire. See the wire, tWiRE. You guys see? Just waiting on the article. I think this is the first time that we've actually been done before, because I really wanted to target 1 o'clock, and now they have a live stream going. I don't want to. I'm afraid that if I show the live stream of what's happening, I'll get banned from YouTube or whatever. Even though it's more like React content. Usually on React content, they don't ban you, but they might. I like the music. That's to the person that texts me about it. I know you're listening. I like it. Matt Lamar says he thinks it's 75 basis points. I mean, that would be a heck of a drop. Most people think it's going to be a 25 basis point drop. So we'll see. All right, here we go. Breaking news from This Week in Real Estate. The Fed cuts rates for the second time this year and will end the balance sheet runoff in December. The Federal Reserve on Wednesday released the decision following a 2-day meeting. This is breaking news. Follow for updates. There it goes. All right, I had to refresh it. In addition,
yeah, they dropped it a quarter.
All right, what? Hey. In addition to the rate move, the Fed announced that it would be ending the reduction of its asset purchases. So, let's see. It approved its second straight cut. Andy says it's a quarter. I don't see it on here.
They went from 4 to 3.75.
There it is. There it is. Okay. So let's see. By 10-2 vote on the central bank's Federal Open Market Committee lowered the benchmark overnight borrowing rate to a range of 3.75 to 4. Governor Stephen Miran again cast a dissenting vote, preferring the Fed move more quickly with a half-point cut. Governor Stephen Miran was the guy that Trump put in there. So he's like, nah, don't do a quarter point, do a half point. Bank of Canada, also Olivier, our northern correspondent, said that the Bank of Canada also dropped a quarter point. Now they started dropping earlier than we did. So I want to say there are like a half a point or maybe a full point ahead of the US on the rate cuts. Let's see. Also, the rate also sets back. Okay, then it just talks about what the rate does. So most of that is boilerplate after. I mean, AI has to write this because he had 1 minute, 2 minutes to write this article. So it's hard to believe that, he didn't. I'm sure he already had it written, but
that stuff's like boilerplate. That's like,
yeah. But some of it is like current numbers, like how this affects it. I guess it's so telegraphed. I wonder what would happen with an untelegraphed move. Used to Yellen was there, and she wouldn't give it up as easy. I think they started giving it up more easy when Yellen got there. But yeah. Oh wow. Okay, you put the whole article there, Adam. Thanks. Oh wait, no, it's the median sales price for a single family, also referred to as new construction homes in the USA, has fluctuated over the last 2 years. This is the thing from Grok. I can't see the whole comment, so you have to summarize it. You have to just tell me. All right, guys. Thanks for joining today. Let me know what you guys are going to do with your extra quarter point as you go around town. We all know that's how it impacts things, right? It's quarter point savings on everything. Isn't that what happens? Isn't that how it works?
Yeah. We've already had all this stuff built in.
Yeah.
So, we were expecting it. So that's why rates have been dropping for the last week. Plus some of the other numbers for the last 2 weeks. Some of the other numbers were helpful as well. But we kind of expected it. There might be a little bump up for the next few days, if not week or so. It'll start trickling back.
Well, as long I haven't had time to read the release, but as long as he telegraphs that other rate drop from now until the end of the year.
Yeah.
They have. Hang on. Let me go back. They have altered. So he does keep editing the article as it goes on. It was like 2 sentences, and then everything was all bunched up, and now it's all spaced. So the editor's going back in and doing it. So that's interesting to watch him work live. But as long as he said that the other rate drops is going to happen, I think it would be a very temporary bump. But when they don't say that, you do tend to see an increase right when that happens, because it's, the lower is no longer priced into the market, and they have to kind of recalculate everything based on what is going to happen. So,
well, and last time when they dropped it last time, and you come out and say, yeah, we're probably going to do 2 more. And then towards the end of his talk, he kind of backtracked a little bit.
Yeah.
Like, see, and it was just like, shut up, dude. Like, these are good things. Like, you're talking positive. The market's reacting great. Just shut up. And he was like, super smart guy, right?
Yeah.
But it's like, he is just, I don't know. He probably doesn't need to be the final. The head of this decision.
Yeah, it seemed. I mean, I would love for a different system to go through all this, but it is what it is, and we got what we got. So, yeah, Matt said I was wrong. It's true. First time ever. That's not true. That's Aaron Mimi Holmes says music is okay. You're pretty entertaining and you have energy, so it's a cool ad. Thank you. All right, then. All right, guys. Well, thanks for joining me this week. Please, please, please follow, like the show, subscribe, do all those things. And don't hesitate to send me a message. If you're watching the replay, drop in the comments what you think is going to happen. I do want to know about the music. but also tell me your rate prediction. Is he going to drop again? Is he not going to drop again? What's going to happen to the mortgage rate? Is it going to go down? Is it going to bump up? And next week, we won't have a show. So next week, I will be in Orlando, Florida with Rise, One Real Rise. You can go. I don't think they have any tickets, but maybe you can find a way in. The onerealrise.com. But the week after that, we'll be back on. So thanks everybody for joining. Find me on Instagram, Ray Zorback, RAYZORBACK. I'll see you next time. Bye.
See you.
Right when Instagram